is free of cost within 1 to 2 days. So please do avail the services. This is peak audit season. Of course, right now it is peak income tax return filing season, but then yes, audit season is also on. Friends, we have covered all auditing standards. We have covered CARO. We have covered item-wise audit of the financial statement, each line item in balance sheet, each line item in the profit and loss account, cash flow statement, notes to the accounts, and now we are covering some specialized topics. Today's webinar is on audit of small entities, which will cover the engagement letter, management representation letter, and documentation. All three are so important, and many times we miss out on those things. An engagement letter is very, very important because it defines the terms between the auditor and the auditee. Similarly, documentation of whatever we do. There's a saying in Hindi, "Pehle likh, fir de, bhool pade to bahi se le." So you first write and then give, so that if there is any error or omission, you can take it back from the records. So documentation is very, very important. And on certain matters, we need to obtain management representation letter. To cover these aspects, we have a very renowned speaker, CA Yusuf A. Kapasi, who will be enlightening our members on this topic. And to give the keynote address, our young and dynamic Central Council member from Jaipur, CA Rohit Rovatia ji is there. Rohit Bhai, as we call him in the council, is an MCOM, LLB, apart from FCA. He's done CCA and FAFT from ICI. I've seen him very dynamic, very energetic, the youngest member of our council, and he's a man of professional wisdom, vision, and strong organizational skills, with a firm belief in all-round inclusive growth of Indian chartered accountancy profession. His heart beats for the profession. For all of us, yes, that's true. And I've seen his fiery arguments in the council. With strong academic lineage and having deep professional insight, at the age of just 23 years, he was elected as the youngest managing committee member of Jaipur branch of CIRC of ICI. And he has been the youngest regional council member, now the youngest central council member. A man of grassroots understanding of the matters and respected for his down-to-earth approach to the issues at hand among his professional colleagues. He's a fellow member of ICI and is a central council member of the 25th Council of ICI. Being a commerce and law graduate, he honed his management skills and established him as a prominent member of our fraternity. The professional skills and acumen acquired by him over the years has helped him make significant contribution as Young Member Empowerment Committee of Jaipur, Committee for Member in Industry of Jaipur, Young Member Empowerment Committee of CIRC. He has also served as a Vice Chairman CIRC of ICI and Vice President International Marwadi Federation, Rajasthan, and RICO Convener, Jotwada Industrial Area Manufacturing Association, Jaipur. During his exceptional tenure, he bestowed his skills as a member of various industries and samitis in Jaipur and Rajasthan. Currently, also is a founder of the Vitta Samanvay Samiti, and he's an altruistic hard worker bestowed with exceptional organizational networking, administrative and leadership skills. And he always believes in thinking out of the box. We have seen his argument power very, very strong, and he comes with a strong conviction. So thank you, Rohit Bhai, and I've seen your organization skills, whether it is CREP or any other program in Jaipur, you have some special skills. So thank you for being the keynote address for today's webinar, and I would request you to guide our members this topic.
Thank you. Thank you so much, Chairman sir. Today's speaker, Yusufi Bhai, and Vice Chairman Vishal ji in absentia. I welcome all the participants to this webinar organized by AAP. And I'm pleased to note that just now, Chairman sir told me that it's the 67th program, and which is really remarkable. I must congratulate to the whole team of AASP for this wonderful efforts and making our people educated and learned towards this audit. Because audit seems to be very difficult in terms of learning, but again, it is very important for all of us to be a consistent practitioner in audit, sir. I'm happy to note the topic selected for this webinar, as the topic covers three very important areas of audit of all the entities. I would like to emphasize that compliance by auditors with the standards on audit is equally important in audit of all entities, whether it is large entity or a small entity. Auditors need to comply with the requirement of relevant essays, that is for engagement letter, for management representation letter, for documentation. You have to go with the relevant essays. Auditors should have good knowledge and understanding of these essays, as auditors may also refer implementation guide to SA 210 and implementation guide to SA 230 issued by AASB, which provide detailed guidance to all on these standards. Regarding audit documentation in case of small entities, following points of SA 230 need to be kept in mind. Audit documentation for audit of a smaller entity is generally less extensive than that of an audit of a larger entity. When preparing audit documentation, the auditor of a small entity may also find it helpful and efficient to record various aspects of the audit together in a single document, with cross-references to supporting papers as appropriate. Examples of matters that may be documented together in the audit of a smaller entity include the understanding of the entity and its internal control, the overall strategy and audit plan materiality determined in accordance with SA 320, assess risks, significant matters noted during the audit, and conclusion thereafter reached. So with this, I sum up my keynote address for the session and requesting Chairman sir to please take forward, sir. Thank you, sir.
Thank you, Rohit Bhai. Thank you for this crisp overview of the topic. And with this, now I invite our learned speaker, CA Yusuf. Over to you, Yusuf.
Thank you, sir. Thank you very much. I think you have given a very brief note about the topic today. I welcome all the members on this topic. How I see the audit world changing in the last 2 years after the NAFRA coming in, where the people has to focus on more of an aspect of compliance with the standards on auditing. So today the topic which we are going to pick up is the engagement letter, the audit documentation, and the management representation letter. Somehow intentionally or unintentionally, these three are the very critical topic, but likely to be missed in because we sometimes at a very small level of an audit scenarios, we might not have an appropriate engagement. Thank you very much. Representation and appropriate I think you have given, but somehow these three are the very critical and the very key aspect. I welcome all the members on this opinion. So I will share my screen. We will first start with our today's topic on standards on auditing on the audit documentation, and I will take you through on the various aspects and the key things which we need to be aware while documenting our audit.
So make it full screen.
Yes, I am.
Yes, sir. Yes, sir. Fine, sir. Fine.
It's fine. Okay.
Yes, sir. Fine, sir.
Thank you. Thank you. Guys, the first topic which is I'm going to touch upon today is on the SA 230, the audit documentation, which is very pillar of our audit. The topic which we are going to discuss today throughout the next maybe 40-45 minutes on this particular standards on auditing will cover mainly the audit documentation importance by NAFRA and the other regulators. What are the key aspects that the regulator now looking from us is a maintenance of the appropriate audit documentation. So we will see some of the snip on what is the NAFRA exactly saying on the audit documentation, how it is impacting our overall audit while we deliver the audit opinion and audit profession. Definition of the small entity. See, though we're discussing the NAFRA, okay, but the NAFRA largely cover the very big or the large slice of clients. Okay, we are discussing largely here the small entity audit, and we want to kind of make our members aware while they are dealing with the small entity, what are the aspects they need to be very category careful. So first we'll go through the definition of the small entity. What is the definition of the small entity? Then we will cover some of the aspect on the SA 230 overview, a very broad aspect. What are the SA 230 coverage that we will cover? We will cover the very important questions on why the audit documentation is very important. Then we will learn from of the key messages of the standards on auditing 230. We will also cover, as Mr. Ohit mentioned, that the guidance note, the implementation guidance note on the SA230 cover some of the important aspect that we need to take care. So that will be specifically, we will specifically cover some of these questions, what are the importance and highlighted in the guidance note of SA230. Then we will like to take any question from our members so that we can guide them if they want to understand any of this aspect better. Sir, I can't see the members on my profile. So is there any way I can see the members so I can interact with them? Is there any way I can see the number of participants, etc.? Jigar, can you hear me? Okay, so we have gone through the agenda. I'm going to my first topic is what on the NAFRA when they are reviewing the audit file. So as we all of are aware, the first now we have an audit regulation, which is the regulation under the Companies Act, where the NAFRA has been introduced, and the NAFRA has a power to go to the audit firm and as well as the management to kind of review the quality of the audit as well as review the quality of the financial statement. When the NAFRA has undertaken the review of some of the files, the first thing that NAFRA has requested is the audit documentation, which is the kind of the standards which we are discussing today, the standards which we are going to understand today. So if you see on my slide, the request, the AQR process, which is the NAFRA quality process, was started by asking the audit firm to provide with the NAFRA audit file. And this is the first step how they have started. So this is very important thing where the audit team or the audit firm has been requested by NAFRA to provide their audit file. So this is very important, guys, where we need to understand that first thing that NAFRA has requested is the audit file. If we see the extract of the other reports, okay, what is being written in the NAFRA report is the record of the audit procedures performed, relevant audit evidence obtained, and conclusions and the auditor reached, which is cumulatively termed as a working paper or a work paper. So when the documentation used as an audit evidence on which the conclusions of auditor are based, it becomes very critical for the engagement team to prepare them very neatly and carefully. Not only the NAFRA is emphasizing on maintaining the audit file, but simultaneously the NAFRA is emphasizing on the maintenance of the audit work paper, which is very neatly and very carefully. Another aspect of this, when we look at some another reports, it is saying that they have drawn attention to the para 7 of the SA230, which says that the audit documentation has to be prepared on a very timely basis. Okay. Para 8 of the SA230 says that the auditor shall prepare the documentation that is sufficient to enable an experienced auditor having no previous connection with the audit to understand the nature, timing, and extent of the procedures. This is very critical element. We are going to discuss this in little bit detail when we look at some of the aspect of the standards on auditing, but they are saying that the expectation of the standards in auditing as well as the expectation of the regulators is to prepare and maintain a document that is sufficient to enable an experienced auditor having no previous connection to understand what exactly we have done in audit. So it assumed like that if we have given our file to any previous experienced auditor, he should be able to identify very categorically what is the nature, timing, and extents of audit procedures that we have done to comply with the standards on auditing. So that's how extensive as well as the independent documentation is required by the standards on auditing. Coming to the next and the last aspect of some of the extract of the NAFRA findings, it has been said that the audit file should be capable of speaking itself, what we just discussed. What has been claimed have been done by way of the audit procedures, or what has been claimed to have been gathered as an audit evidence should be supported by the audit file. So if we are claiming that we have done this work, it should be supported by the audit file. Given this position on the standards on auditing, where extensive and independent documentation is must, there is virtually no scope for the auditors to submit any oral submissions or on the basis of discussion. So these are some of the extract, which is some of the reports of the NAFRA, where they are emphasizing on the report on the or a requirement of the standards on auditing, requirement of the specifically the audit documentation. So guys, so the team, maybe colleagues, what the message I just want to pass, it's not about only a large entity which is covered under the NAFRA, but when we are going to any third party or when we are going to a person, the requirement will equally apply to the small entities. Requirement will still apply similar way to the large entities, the large audit and the small audit. The NAFRA findings is clearly an examples of what we need to deliver as a part of our audit, whether it's being a small or large audit. Next thing, as I've said, guys, as a team, now what we are going to discuss as a small entity audit. Okay, larger of our audit colleague who are doing an audit of a small size companies. So to differentiate between the requirement which we need to apply as a part of the large corporate and as a part of the small entities, first we have to understand the definition of the small entity. So the definition of the small entity is divided into the two aspects. One is a small entities, which are the corporate entities. Second was a non-corporate entities. The corporate entities, which largely cover the paid up capital less than or not exceeding 2 crore rupees and a turnover not exceeding 20 crore rupees. So as per the small audit entity criteria, if we are doing an audit of a small by application of the standards on auditing or by application of the limited standards on the small audit, the definition of that small company has been derived from the Companies Act, where they are saying that from the first day of April 2021, which is reproduced at the bottom of this slide, which says that any company having the paid up capital and a turnover not exceeding 2 crore or 20 crore respectively will fall under the small entity criteria. Now, why we are discussing this small entity? Because the moment you are falling under the small entity audit, you will apply the lesser procedures, the lesser extensive audit procedures, as our colleague Rohit says in the beginning of the call, said since we are doing the small entity, there will be a lesser application and a lesser complexities. Further, this criteria will not apply to any public company. So if you are doing an audit of a public company, straight away you have to follow the routine and regular standards on audit procedures. There is no exemption. Same way, this clause will not apply to the holding company or the subsidiary company or a part of the group, and you are a part of the, you are either a holding company or a subsidiary. This will not apply. A company registered under Section 8 will not apply. A company or a body corporate governed by the special act, this will not apply. So these are the first category. Sorry, this is the first category where you are auditing a company, and if this fall under the criteria here, this will, you will do a procedure which is a small entity audit procedures. Second one is a criteria for a non-corporate entity. So like if you are doing an audit of a partnership firm or a sole proprietorship firm. So what are the criteria when you can go ahead with the small entity audit? So these are the criteria which is given under the guidance note on the ICAI of the small entity audit, where the bullet point A is saying that where there is a concentration of the ownership and management in the small number of individuals, that either a single individual or maybe a natural person or an enterprise that own the entity or exhibit or relevant, and there are similar kind of characteristics which is given by the qualitative aspect. And following are the 6 criteria which need to be kept in mind, and we need to be very careful. Okay, it says that you have to comply with the condition A and B both simultaneously, where you have a very small number of individuals or a single ownership, and let's say the criteria 1 to 7, if I read it for the benefit of all, which is the straightforward and uncomplicated transactions. There are no complicated transactions, very simple, straightforward. Simple record keeping, okay, like they are maintaining their books of account in the Tally or the similar kind of software. Simple record keeping. A very few line of business and few product within the business line. So it's not a very complex business, and a very few line of business. Only few internal control in the organization, because it's largely managed by these small people, or a small individual or a single individual is largely a few internal control in the organization. A few level of management with a responsibility for a broad range of controls. So only there are a few people who are involved in the business, largely managing the control, largely managing the management, and they are having an overall responsibility of the managing the business and the controls. And a few person, many having a wide range of the duties. There are only a 1 or 2 persons who are involved in the organization, but they are doing the duties from maybe the procurement till the encashment, or till the sales and till the collections. These are the managed by the few individuals. So these are some of the criteria which we need to be kept in mind while we deal with the small entity. So I hope all members should be clear now what they will likely to fall under the small entity. So be very careful on this, members and the colleague, okay, because the moment we start the audit, we have to be first determine whether it's a small audit or not. And the criteria are the paid up capital and the turnover not exceeding the 2 crore and 20 crore respectively. And then non-corporate entities criteria. I will show you some of the aspect of the guidance note which is issued by the ICAI on the auditing of a small entity. The aspect which is you can see on the slide, which are the qualitative and the quantitative threshold which you apply to the non-corporate entities. So this is the checklist which is ideally the auditor should maintain in their file while they conclude that the audit which we are going to do is a part of the small entity environment. So if it is a small entity audit, this is the checklist. The checklist says that definitely it's not a listed audit client, it's not a bank, it's not a financial institution, turnover not exceeding the threshold we discussed, does not have a borrowing in excess of rupees 10 crore, is not a holding or subsidiary company, not more than 100 employees. I expect that audit engagement will not take a significant longer time than the hours of the we expect in the larger entities, and the auditor utilize not more than 3 audit staff. So if this criteria is met, you should keep this checklist on your note on your audit file and then go ahead with the audit as a small entity. Now we have understood the small audit entity concept. We are quite familiarized with the requirement of the audit document, importance of the audit documentation, because the NAFRA is now on the looking at all this aspect very carefully, irrespective of the size of the entity, NAFRA involved or not. The expectation of the any third party while delivering our audit will be the same. So the requirement of the SA30 on the documentation will apply very similarly. So now what SA30 tell us? Okay, first thing, the SA230 inform us in the para 1 is about the auditor responsibility to prepare the audit documentation. Very clear, since the audit is being done by the auditor, they are delivering the audit opinion. It's an auditor responsibility to prepare the audit documentation and audit financial statement. Second aspect, to be adopted to the audit of the other historical financial information. Maybe this standard are similarly adopted when you are doing any audit of the historical financial information. Maybe if you are doing a statutory audit, maybe you are doing any other kind of an audit. So that also should be in compliance with the SA230. The third aspect at the bottom of this circle is the specific documentation requirement of the other essays do not limit the application of this essay. What does this mean? Let's say there are other standards which specifically require us to kind of maintain some documentation. Okay, like the 2 other standards which we are going to discuss in some time is basically the the engagement letter, as well as the maybe the management representation letter. So these are the additional documentation prescribed. So that we have to anyway do. But this SA 230 is primarily on the audit documentation, on the basic documentation. Other standard will always have their requirement to do the additional documentation. The last point, the laws and regulation may establish some additional requirement. So basically, there are some laws and regulation which require us to do some more additional documentation, etc., or maybe sometime it required to have some additional compliance. So that is also separate. These are the bare minimum. The important message is that SA30 prescribe the bare minimum documentation required. It's an auditor judgment, and the auditor calls that how and what additional documentation they need to maintain. So out of this slide, the important thing or a message which I want to deliver to my member is the audit. Since its primary focus on the auditor responsibility, it's auditor who has to maintain the proper documentation. What are the benefit or what are the this important benefits which we are looking for maintaining the right documentation? So the standard help us if we have maintained our documentation in line with the SA 230. The standard help us, if I just pick up these points very quickly, engagement team in planning and performing audit. So if we start documenting, we realize that what we need to plan, what we need to perform, discuss with the engagement team and plan and perform and document that plan. That assistant supervision and direction. If there is something which is documented, which is written, that is can be supervised and can be directed towards proper way. If everything is verbal, it can't be supervised. It gives us the evidence that we have performed our procedures. Next is assist in the quality compliance reviews. So as per the standards on quality compliance, if the audit need to be involved the quality reviews, it assists the other quality review person to review the audit procedures. It creates accountability in terms of who has performed the procedures, what need to be delivered. It contains the records of the matter that are the significant important. This is very important and we'll discuss this in little bit detail. But the important message is here that it contains the records of the significant matter. So if while doing an audit, if you have any important matter, you will record it. Evidence of basis of the conclusion that we have reached on achieving the audit objective. So how will you conclude your audit? And that evidence is given by the audit documentation. And definitely help us in the external inspection, like the large client where the NAFRA is what we discussed. So it is an external inspection, and the first thing that is somebody going to ask us is our audit file and our audit work papers. So these are the key benefit or the key requirement that we need to fulfill, and that is straight away from our standards on auditing SA 230 para 2 and 3. What is the objective of the standard? The objective of this standard is prepare a documentation which is sufficient and appropriate to record the basis of auditor report. If the auditor is issuing the audit report, it is fundamentally important that auditor has to ensure that appropriate record has been kept to ensure that his delivery of the audit report justify that. Second is the evidence that the audit was planned and performed in accordance with the essays and applicable legal requirement. So let's say if somebody as a peer review or maybe any other aspect, if the questions or challenge us on that how we have performed the audit, the audit documentation help us to respond to this kind of questions, that whatever we have done is as per the applicable standards on auditing if the documents has been maintained in that particular requirement or documentation has been maintained in that particular line. This is the very important chart and the last aspect or the broad overview of the SA 230, whereby the emphasis is on maintenance of the appropriate audit record with demonstrating the nature, timing, and extents of the audit procedures. The left-hand side, the first, in the middle, you can see the first rectangle box, which is identifying the nature, timing, and extent of audit procedures. So while we do our documentation, this is very important. It identifies the nature, timing, and extent of our audit procedures. The second is the results of audit procedures and the audit evidence obtained, that we have largely touched in our previous slide also, that what are the results of the audit evidence and the procedures, and the significant matters are identified. We will discuss in detail later that how it to determine the nature, timing, and the audit procedures. So if I want to summarize before I go to the next slide, largely first it covers the auditor responsibility to prepare the documentation. Second, it covers the object where we need to maintain the audit documentation so that we can respond to the questions of the regulator, quality reviews, external inspection, and supervise our audit, planning our audit, and maintain a significant matter. And the last portion of this is basically what audit procedures you are performing. So this is the summary of the SA 230, and we will discuss some aspect of this in detail in the coming slide. As we discussed, okay, the SA 230 is preliminary, most important standards in the complete audit, because it gives you the idea of what you need to document. Okay, because the audit, as we said in the past, what documented is not done. So then this standard help us to identifying exactly what we need to document. Why it is important? We largely discussed this. I'm just reiterating some of this aspect. It's considered as a backbone of our audit. Okay, if we are delivering our opinion, if we don't have a documented anything, apparently we have not done our work. Now, if we have performed our work and documented that, we discussed this aspect where it helped the team to perform and plan the audit. It helped to supervise and gives the accountability to the person who are doing it. It gives a importance of the significant matters that we need to carry for the future audits, quality review compliances, and the last and the important point, it is covered it helps us in the external inspection. Now, just to re-emphasize some of the aspect here, see, when we are saying that inspections, third person, reviewing our file, it's when we are delivering our audit opinion, we carry a responsibility of that opinion to the person to whom the opinion actually being delivered and to the person to whom that audit opinion goes. So for example, our audit opinion is given to the tax authorities, our audit opinion given to the banks, our audited financial statement audit opinion given to the other parties or other maybe agencies, etc. So all that person are relying on our audit work. Now, because of any circumstances, if there is an inspections, let's say by the tax authorities, by bankers, or by any person, our audit documentation actually help us in responding that we have done our work in the manner which is required. Now I am taking some of the key element or the key aspect on the SA 230 on the audit documentation that we need to maintain, and some of the key takeaways from the implementation guide on the SA 230. So, and I think in the last half an hour, we just broadly discussed on the importance of the audit documentation and some of its auditor responsibility and the other aspect on how we can benefit it out of this. But what is exactly the audit documentation? So then when we go to the guidance note, it says that it contains a record of all audit procedures performed, relevant audit evidence obtained, conclusions, and the auditor reached, which is termed as a working paper. So it's a combination of the audit procedures performed, evidences obtained, and conclusion reached. All three cumulatively become your working paper, cumulatively become your audit documentation, or become your audit file. Okay. Now, what are these working paper, etc.? So any procedures you are doing while doing an audit, or the working, etc., you are maintaining, that all form your part of your working paper. Okay. I think as our chairman mentioned in the beginning of the call, that all session on the all aspect of the standards on auditing in terms of how to audit the various captions, the balance sheet areas, P&L areas, some of the CARO things. So whatever the work you are doing out of this, okay, whatever your understanding on the captions that you have carry forwarded, all work will become your working papers, that become your audit documentation. And then when one or more file is combined and maintained, whether in the physical form or the electronic form, and arranged in one particular manner, it becomes your audit file. So these are the two critical terms which is being guided by this standard essay, this standards on auditing essay 230, which is your audit documentation, your audit file. So the work you are doing on any financial statement caption, the balance sheet, the P&L, the notes to accounts, and whatever the documents and the paper you are maintaining is your work paper and audit file. What would be the form and content and extent of audit documentation? The auditor shall prepare the audit documentation that enable the experienced auditor to understand the nature, timing, and extent of procedure. This is very critical requirement, and there's a lot of responsibility we are carrying when this statement we are reading it. It is saying that we should document our work paper in a manner that should reflect the nature, the timing, and extent of procedures. The nature of procedures may be, let's say we have done some vouching, we have done some verification, we have done some analytical procedures. What kind of procedures we have done? Timing, when we have done, whether it's an interim audit, year end, after the year end we have done some procedures, when we have done. And extent, what extent we have done the procedures. This three things has to be categorically maintained in the file. So as a small audit, you can maintain all this aspect in a very concise manner, and I will show you some of the important aspect on the guidance note on the audit of small entity at the later, where all this can be compiled in a very specified format. Thanks to ICAI who helped us with this guidance note on the audit of a small entity. Thanks to ICAI who helped us with the guidance on the small audit entity, where they have prescribed all format as well. And if we are maintaining our documentation in that particular format and under that requirement, I think we are largely compliant with the SA 230. So first thing, while we doing our audit, we have to ensure that we document the nature of audit procedures, timing when we have done, and extension of the procedures. Coming to next, which is the result of our audit procedures. So now if you have done the procedures, you have to simultaneously conclude the results as well. So that's how we reach to our results of the audit procedures. And the third and very important matter is the significant matter arising during the audit. So if you have any matter which is of significant nature during the audit, you have to ensure that it is properly documented in the audit file. The members, I just want to highlight one critical aspect. Okay, see, the audit documentation is when we are doing a small audit, it is very important in terms of the way it at least gives us an impression to somebody what procedures we have done. My own personal reading of the standards on auditing and the message that I learned from this is the audit which we are doing is in terms of an entity which we are doing, the operation of that entity, how the entity is funded, that all aspect is making our documentation requirement vary according to the kind of an entity. So for example, the individual doing an audit of an entity who has a no borrowing, which entity has a no borrowing, entity has a no other funds has been obtained as a loan from any third party, and there are no significant related parties also. So then when the person is doing a business with their own fund, there's the chances of a fraud or the risk of an audit is much lower, because nobody kind of do a fraud with their own money. Okay, now let's say if you are doing an audit of an entity where your client has borrowed the money from the bank, let's say 10 crore, 15 crore, 20 crore, any XYZ amount. Simultaneously, client has also maybe some other companies they have, okay, in the group or in the family, they are the related parties. Okay, there's a fund which is going from one entity to another entity. There, the requirement of maintaining the documentation will become more stringent. Okay, and that's how I want the member to identify the significant matter during the audit. Okay, let's say you have an audit, a very small audit, but borrowing, but a related party transaction. but let's say some unique transaction during the year, some unique product, okay, some intangible kind of an product. Okay, so these are the factors which members should be very careful in determining their audit documentation, because these are the scenarios where the third person or the maybe external person will rely on our financial and maybe question us later if they find something suspicious, or the question the management, question the auditor. So this is the thin line of a difference, or the line of difference we need to maintain while we determine the timing and the audit procedures. Now we discussed the significance matter. Why I've highlighted this, the significant matter is because then these are the significant matter, like the borrowing you have a related party transaction, you have some intangible products, some kind of an unusual transaction. These are the significant matters which need your more attention. Now, the standards on auditing SA 230, the implementation guide, gives us some example on the significant matter, which is the matter which gives a rise to the significant risk. Okay, let's say if the client has into the new project, they have taken a borrowing, okay, and funded the new project, but the new project, the viability or the visibility is still not clear. There is a significant risk in terms of a repayment of that borrowing. Okay, so this is kind of an we have to identify on the basis of the client nature, industry, and the audit client we are doing, what are the significant risks, and then it will determine the extensive audit procedures. The results of the audit procedure indicating that the financial statement could be materially misstated. If we feel that the financial statement will be materially misstated, then we have to be very careful while determining our audit procedures. Circumstances that cause the auditor on difficulty in applying the audit procedure. Let's say if you are auditing a client and the client is selling some intangible product, we don't know what the product is, whether the product has actually moved. They have just given some intangible kind of a thing to the customers. So we have to be a little bit careful in terms of whether we will be able to apply appropriate audit procedures. Like in case of when the client selling normal goods or the merchandise, you can say that goods has been moved, there is a GRN, there is a e-way bill, etc. Okay, but when you are dealing with the intangible thing, it's a very gray area how you comply with the relevant audit procedures. So in that scenario, you have to categorically very careful that what are the significant matters that you need to consider. Finding that could result into the modification of the audit opinion, including the emphasis of matter paragraph in the auditor report. If you feel that there is any kind of an emphasis or a matter paragraph or any modification in the audit report because you are not able to do or conclude some procedures, and if you feel that there is an emphasis or any modification in the para, this all are significant matter which need more focus in your audit documentation. Sometimes now members may feel that this is the area which is not 100% comfortable in terms of an all audit evidence obtained, maybe qualify the audit opinion, modify the opinion. But in this scenarios, the audit documentation is more important, how we have reached to the conclusion of maybe modifying our audit plan. So the audit documentation, the more focus on the documentation of the significant matters. Now, what are the important factors in determining the form and content of the audit documentation? Now, because we have to focus more on the audit documentation on the significant areas, our documentation should be, or the documentation of the professional judgment made where significance serves to explain the auditor's conclusion to reinforce the quality of the judgment. If I want to explain in a very simple language, this implies that whatever the judgment you have concluded at the time of doing an audit, somebody independently reviewing your documentation should be able to reach to the similar judgment while going through your documentation. So for the significant matter, primarily it is very important for the members to ensure that they maintain their file in a manner that it reach to the same conclusions by independent person. Another aspect of the audit documentation on the discussion which we are doing with the management. Sometime on the small audits, it is very common that we discuss, we communicate with the owners, we meet the owners, we understand the various aspects of the owners. Okay, so the standards on auditing on SA 230 categorically emphasize in terms of what are the discussions of the significant matter has to be categorically documented. The documentation is not limited to the record prepared by the auditor, but include the other records such as the minutes of meeting prepared by the entity personnel and agreed by the auditor. The other with whom the auditor may discuss the significant matter include the other personnel with the entity and the external parties providing a professional services to the entity. So not only the owners and the partners of the firm, or maybe the owners of the proprietorship firm or the director, but other person who are involved in the entity, the minutes and the discussion of that is also very important to monetize and to document as a part of that. And my own understanding on this is categorically more important when the business is done by the few individuals, because then you largely rely more on the discussion. And those discussions sometimes lead to a proper conclusions while you are doing an audit, but that discussion has to be minutized. You may do some brief noting of that minutes and can put it in the audit file. That will help you as a part of your audit documentation. We discussed that the form content of the audit documentation depends on the important aspect is the significant matter. I have covered the significant matter separately because the significant matter has to be given a more importance while dealing with the audit documentation. Rest of the aspect which will apply your audit documentation is the size and the complexity of the entity. Let's say if you are doing, as I said, a very small audit where there's no fund which is given by the bankers, third parties, no loan, no related parties much, a very small audit, then your procedures will be simple and your procedures will be limited. But it's a complex entity, a new entity, a big project, a bank borrowing, maybe related parties, transaction with some foreign companies. So this is create a more complexities, create a additional responsibilities on the auditor to create a appropriate documentation. Nature of the audit procedures, what we are performing, the risk, if any, identified, the significant matter, what we already discussed, and the exceptions that we are identifying. So these are the factors which will help you to determine how much you need to document. Let's say if you are doing an audit of an area, a trade receivable or a trade payable. So then one of the important procedures that you do a confirmation rollout procedure. So the bank, when you are doing a confirmation rollout procedures, this kind of procedures, you need to document appropriately in your audit file and ensure that this is properly done so that somebody challenging you later on the balances of the receivables payable, you can categorically inform the individual that this is what the audit procedures we have done in terms of rolling out the bank confirmations or the receivable confirmations, etc., etc. Let's say if you are doing an audit with a limited customer, 1 or 2 customers, you can do the confirmation from both the customer. You are doing an audit of the client where the customer are, let's say, 50. So you might do some sampling. So this is called the size of, maybe this is called the nature of the audit procedures and the extent of the audit procedures, where maybe a small entity, 2 parties, we can roll out to both the parties. A big entity where the 50 parties are involved, maybe we can roll out to 10 parties, 15 parties, depending upon what is our materiality level, depending upon how we see the risk, etc. So this is called the extent of the audit documentation. The last 2 bullet point is the need to document a conclusion or the basis for a conclusion not readily determinable for the documentation of the work performed or the audit evidence obtained. So then if you perform the procedure but still not able to conclude some aspect, then the form and content and extent of the documentation may further be enhanced. The tools you are using, the methodology you are using will also change the form and content and extent of your audit procedures. So just keep in mind, members, when you are doing an audit, you have to first consider the a small entity criteria, your entity which you are auditing, the size of the entity, nature of the entity, you see any risk on that entity, and then you can plan your audit procedures, audit documentation. Some of the basic documentation, which is the illustration here, is the engagement letter, maybe the account balances and comparatives, audit programs, what we are doing, summary of the significant matters, confirmation, checklist, copies of the entities record, contract. This is the illustrative list of some of the basic documentation as an auditor what we maintain. Now, members, I will take you through on some of the aspect of the smaller and less complex entities. Okay, some of the standards on auditing are very broad and required us to do a very detailed procedures, but which is not applicable or maybe applicable only at a limited extent while you are doing an audit of a small entity. The first one is SA 260, communication with the owners. See, SA 260, communication with those charges governance is a very a broad standard having a larger responsibilities on communication. But generally in a small audit, there's only a 1 or 2% involved. It's very limited requirement. Why I have highlighted here is, see, in case of a partnership firm, in case of a small companies, there may be a more than 1% involved. So we have to agree with the client to whom we need to communicate. While drafting your engagement letter, which we see in the next topics, be very careful that you give us a kind of an appropriate emphasis in terms of an communication. Because let's say if there are 2 people involved in the company, or there are 3 partners involved, somebody later, other partner come to us saying that there is no matter which has been discussed while during with the audit. Okay, so we have to agree with the basically client on whom we need to communicate for the smaller client. And this is very important to avoid any kind of an confusion or a gap where the external person or any conflict among the owners raises a question on our work. So let's say our report submitted to the authorities, bankers, etc. And there are the questions. Then one of the partner or one of the director might tell us this has been never discussed with me at any point of time. So I am not reliable as a part of on this financial statement or maybe on the auditor report. I am not responsible for this financial statement auditor report because I have not been communicated. Okay. So though he is a part of the company, maybe as a director or as a partner. So as a part of, we will see in the engagement letter also, agree with your client whom you need to communicate. See, this picture sound very rosy when there is nothing wrong, members. Okay, the message is here to protect ourselves when there is some kind of a dispute, some kind of any adverse things. SA 265 internal control definitions, definitely much not complex for the small audit because there are a very limited number of individuals involved in this kind of activities in the business. So then maybe we can. It's only a management who is responsible for granting. So example here is given where the management sole authority for granting the credit to the customer and approving the significant purchases, the lesser or removing the need of more detailed control activity. There's one individual or the one person who is the owner of the business, guiding everything, controlling everything. Then there is no removing the need of the detailed control activities. In the control aspect also, there is no need of much communication. Fraud related aspect. So when it's a very small owner size business, see, fraud can happen when there is a intention of misusing the assets or a fund. Okay, now it's a limited number of the individual involved in the audit or the client. There is a likelihood of chances is lesser because it's own fund. Nobody will do a fund which is my personal fund. Nobody will do a fraud with their own fund. Okay, so then it's a kind where your lesser responsibilities on the fraud side. But yeah, as I said in the earlier slide, when there are more directors and the partners are involved, agree whom we are communicating so that something goes wrong. Nobody challenges us that this has been never discussed with the other individual in the organization because you have already agreed at the beginning of the audit to whom we need to communicate. Second aspect is on the estimates. Okay. In the large and complex audit, we see that there is a procedures and the methods and the protocol of doing an estimate. But the small audit, it's an owner who largely decide on the estimate part, like that paisa aayega ki nahi aayega, customers say collections, like the provision for doubtful debt. In the very organized scenario, we do our model, expected credit loss model, or maybe some reliable provisioning policy. But in the small audit case, you can directly, for the estimates, you can directly discuss with the owners. That will help you to conclude your audit procedures. As we said that the planning involve only limited people, what I highlighted in yellow, the small entities involve largely the engagement partner or 1 or 2 member. The engagement team can do a planning documentation, which will not be a complex, which not be a time consuming exercise. they can do with a proper maybe a brief documentation or a brief planning on same, rather than writing the multiple things. The risk in the financial statement. Though it's a very small audit, okay, the risk in the financial statement has to be categorically identified. As an auditor, we need to understand when the partner or a proprietor is doing an audit, they need to understand, is he carrying the risk of material misstatement? Okay, let's say, as I said in my earlier example, if they're dealing in the kind of an intangible asset, okay, if the person is dealing in kind of an intangible goods and services, having the large borrowings, okay, so these are the triggers which should challenge the auditor to identify, is there any risk of material misstatement? The last and the favorite of mine is while we are doing an audit of small entities on the going concern, okay, because the small entities are largely financed from the owner. In that scenarios, see, standards on auditing SA 570 is very important, applicable across the audit on the going concern, where the auditor has to ensure that company will survive for at least next 12 months, and he has to conclude as a part of our audit procedures. Now, though you are doing a small entity, this responsibility doesn't take away. You have to understand how the fund will come from the owner. If owner has given any guarantee on his personal asset, make sure that the guarantee is there, taken confirmation or the representation from the owner that they will maintain this guarantee. And the last, also see that whether owner will be able to meet his obligation if he has given a guarantee. It's not like that the owner has just given, but the owner himself is not standing on the right amount of the credit. So all this often criteria is, so this standard, what we discussed, the 5-6 standard, are carrying the lesser responsibilities on the auditor while they deliver on the small entity audit. Now, the last portion of the SA 230. So if I want to summarize before we go to the last portion, first we emphasize on the audit documentation requirement. Then we identified that the audit documentation, why it is important. Third, it is very important to maintain a proper documentation of the significant item or the significant risk. And the next aspect is what we understood is the nature, timing, and extent of the procedures, where depending upon your risk of the entity, size of the entity, complexity of the entity, previous experience of the audit, you will determine what procedures you are doing. And procedures, I think, largely where the members has been guided across the other session on what audit procedures they need to do on the various financial caption. This standards is just give you a emphasize additionally why you need to do all this and what you need to maintain a clearly manner. It can be understood by any individual separately. What will be the audit documentation of the exceptional circumstances? Now, what is the exceptional circumstances? Okay. Now, exceptional circumstances, maybe it's any point of time we see any exceptional circumstances, example of which will come to the bottom of the slide. But if we have any exceptional circumstances, then document what are those circumstances, document what additional audit procedures that you have performed, and third, when and by whom the resulting changes are made in the audit documentation. So the important element here is then when you identify the any specific circumstances, okay, document that what are those circumstances. Second, identify this, what are the additional evidences you have obtained, and what are the changes that you have made in the audit documentation file. What are the example? Okay, if question 30 is from the ICI guidance note on the SA 230 is giving us an input, what are the example of these exceptional circumstances, which says that the example include like some of the important fact which the auditor has came to know after only issuing an audit opinion. If we would have known this matter before, we would have might given us some different opinion. So for example, let me give you an example of these circumstances. You have concluded your audit. You have given your opinion to your client. You realize that there is a litigation which is going in the vendor. Okay. And audit client has claimed a certain amount. Now, ideally, audit client has claimed certain amount. It should not impact because it is not going to give any additional liability to your audit. But in the same scenario, your vendor has counter-claimed the amount from you. Let's say you have claimed 10 crore, your vendor has counter-claimed 100 crore from you. So that is may having some impact on your opinion, because 100 crore, if the vendor when the case and there is adverse things, then your complete opinion can have a maybe a modification or a qualification depending upon how critical, what is the size of the overall financials. This become very critical. So if this fact of the counterclaim you are not aware, and if you came to know after completion of your audit, then you have to be categorically modifying your audit opinion. So this kind of an exceptional circumstances happen. You have to identify and perform the audit procedures and then make the relevant changes in your procedures. Now, we discussed largely on the audit documentation importance, what kind of a documentation we need to make, the extent of procedures. Now, coming to the last aspect of this is what is our audit file assembly timeline? Okay, so what is file audit assembly first? File audit assembly means whatever the work paper, whatever the workings, whatever the discussion, minutes, etc. you have maintained during the audit, that you have to keep as a separate audit file, and it should not take more than 60 days from the date of signing of report to keep it as a separate archive file. So all this file or a work paper which you have maintained has to be categorically stored or in a separate file, which should not more than ideally 60 days from the date of your auditor report. For how many years I should continue to maintain that record in my database? So as per SQC 1 also and the Companies Act also required you to maintain all the record for at least 7 years from the date of auditor. So any person or any third persons, the bankers or anybody, the tax authority is coming to us and asking the questions on our audit reports or any audit work paper or a documentation should be available with us for at least 7 years. The important aspect, guys, which I was keep on talking during the session was in the this guidance note on the small entities. So just to give a overview of this guidance note, this is the guidance note on the audit of small entities. This is a very nice document that I have come across to while if I need to deliver a very small audit. If we go to the index of this contain the various formats, okay, which as an auditor we need to maintain as our audit file. Because see, many of the members are wondering, I am seeing since last 1 hour that we have to maintain documentation, but how? Is there any format, etc.? So this is the guidance note issued by the ICI, including some of the format, including the checklist, which help the member to deliver the audit. Let's say if you see the index, which include your aspect on the planning and controlling. What are the things that you need to maintain as a planning and audit and controlling and audit? So maybe so these are the aspects which we need to maintain. And this is categorically covered by the checklist as well as the illustrative format, like understanding of the business, the process, the audit program, analytical procedures, materiality, fraud risk question. Then it contains the audit program as well. One of the very important thing our chairman has highlighted in the beginning of the call, that we have gone through the sessions on the various audit program. How will you audit the tangible asset, intangible asset, investment? So all this is being maintained here in this guidance note, the audit program, and you can just do the procedures at what given here. Then the audit declarations, okay, summary memorandum, any financial statement review procedures, the checklist, illustrative format of the confirmations of the inventories, illustrative format of the receivable confirmation, deposits, disclosures on the investment, MSME, appointment related, specimen of the appointment of the auditors, communication with the previous auditor, representation letter. All this illustrative format are being given in this guidance note. So utilize this guidance note very carefully while you are doing this delivery of the small audit. Make the use of all the illustrative reports in the letter which is given here, and then deliver your audit. Let's say this is the very example of a small audit model work paper, where they are saying that these are the primary thing you have to maintain as an overall file assembly. So appointment letter, previous auditor, the checklist, the engagement letter, are these documents are there in your file or not? Okay. Then there is also a profile of the audit client. What is the audit client? Financial. What is the constitution in terms of LLP, HUF? Then there are various questions around it. So applicability checklist, which we discuss of the small entity. Okay, then we have a engagement letter format which has been given to us. Then we have a representation letter format. We have a acceptance formality. So before we accept the audit, we have to ensure that we have an engagement letter. The client has a proposal to us in terms of they've given us an intimation. Okay, there's a formal company's letter of appointment. We have done our previous auditor communication. EDT1 is filed, engagement letter. So this guidance note contain this kind of an various checklist which help the members to maintain their bare minimum audit documentation as a part of their audit file. So I think with this last message on the audit documentation, members, I think this is what largely expect from us and the auditors to kind of deliver or to maintain our audit documentation. So on the SA30, this was largely the message, members. If you have any questions that we can take it up, maybe we will keep it open for the next 4 or 5 minutes to have any questions on the members from the audit documentation. If they want to understand anything aspect of a detail or the practical difficulties they must be facing on understanding the audit documentation or how to maintain that, we can take up that questions. Jigar, question members can ask the questions if they have, right?
Sir, questions all together for all the topics we will take at the end, sir.
Okay, fine. So I think then we will move to our next session, which is on the engagement letter. Yes.
Yes, sir.
It's 1 minute. I am just going to my next topic. So the next is members on the agreeing the terms of the audit engagement. Okay, this is very important thing, members, because what we are going to deliver is being abided by an agreement. Sorry, excuse me, members. So what we are going to kind of deliver is to be agreed in terms of our engagement letter. As I said, the small entity audit guidance already include the format of the engagement letter. The purpose here is to make you aware a very limited aspect in terms of why this engagement letter is important. So we'll cover the engagement letter as a part of the auditor responsibilities, some of the precondition that should be there in the engagement letter. See, I would specifically like to highlight to the member where this specifically members, I want to highlight you on some of the precondition because the precondition are basically management has to agree on some of the aspect before we accept the audit. So if management is not agreeing on some of the aspect, we can't actually expect the audit. We can't actually accept the audit. So what are those preconditions? We have to be very categorically aware, irrespective of the size of the entity, whether mid-size, small size, etc. We have to be categorically aware, and that's how we have to deliver our audit. So the engagement letter is a must for our audit, because if the client does not agree on this precondition, we cannot do audit. If there is a limitation in the engagement letter, what if there is any limitation? We'll understand that in our session. The recurring audit and engagement letter. So let's say if I'm doing an audit on a year-on-year basis, how I do my engagement letter, and if there are any special situation that we need to take it care. And the last one is the signing of an engagement letter. And then we'll have a question answers. So these are the primary 5-6 points which I want to brief you in the next maybe 20 minutes on the engagement letter perspective. So if we read the first slide, the first slide emphasizes that it's an auditor responsibility to have an engagement letter. See, when the client wants us to do audit, definitely he wants our financial statement to be delivered, the audit report to be delivered. He is not bothered for the engagement letter. So the responsibility of having an appropriate engagement letter will be of an auditor responsibility to ensure that it is being prepared by the auditor, prepared by the audit firm, and given to the client. As I said, the precondition, very important aspect. So there has to be a precondition, which is the responsibilities of the management. We will see in detail that has to be there in the engagement letter. Why we are entering into the engagement letter is to give some common understanding between the auditor and management. They understand what is their responsibilities and they understand what is the auditor responsibilities differently, so that we can kind of differentiate between the responsibilities of the auditor and management. What are the preconditions for the audit? Very important topic, guys. The precondition to an audit that the management use an acceptable financial reporting framework. What does this mean? The management has to give us a confirmation to the auditor that they are going to prepare the financial statement on the basis of the acceptable financial reporting framework. We'll understand what is ACRF, which is acceptable financial reporting framework, but management has to agree that we'll prepare our financial statement on the basis of the financial statement or reporting framework which is accepted in India. So this is also very critical and important element. Okay, while we do a small audit, we tend to help the client in them kind of consolidating their financials, etc., and maybe preparing. But the advice to all the members, at least ask the client to prepare their financial statement, because then you will be able to apply your audit procedures properly, able to apply your risk assessment properly. Then your focus has to be doing your audit, understanding the financial statement, delivering the opinion, and not the preparing financial statement. As I said in my previous slides also, depending upon the client size, complexity, this all become more critical. The client having the huge borrowing, related parties, the capex plan, some new ventures, some new kind of businesses. Okay, this all become very critical, where the auditor focuses on the audit part of this, and management has to at least help the financial statement in an appropriate framework. So then what is this precondition? The precondition is that whether the financial reporting framework to be applied in the preparation of the financial statement is acceptable. For example, if the framework chosen is other than broadly acceptable framework. So what are broadly acceptable framework? Accounting standard or Ind AS, these are broadly acceptable framework. If it is not that, the auditor need to agree the framework in terms of an audit engagement explicitly. The auditor has to be categorically agree the engagement in terms of what is the terms of the engagement, what is the framework to be applied. Because in the general parallels, auditor has to issue the opinion on the basis of accounting standard and Ind AS. This sound very common, but it is very important that the auditor, while delivering the audit, agree the preparations and agree the responsibilities of the management to prepare the financial statement in the right framework. So what are the, if we want to ensure that key element in the engagement letter, which likely to be covered if we are following our standard format letter, but the key messages which is there has to be there in the engagement letter should include the management responsibility to prepare financial statement. Second, the internal control, which the management need to establish to ensure that the financial statement are prepared in appropriate manner. So that is the second responsibility. Third, provide an access to all information which is required. B, additional information that we may request while delivering an audit. And C, unrestricted access to the person within the entity. See, these are the bare minimum thing that the client has to provide us, in which they have to agree as their responsibility. All the information, all the additional information, access to all person to ensure that they prepare financial statement in right framework and implement appropriate internal control. So these are the some of the key element in terms of a part of our audit engagement letter. Now, what happen if there are a limitation or the precondition which are there in the engagement letter? See, this help the auditor about the client reservation. Okay, we put a kind of an requirement in the engagement letter that you have to give access to your person, all information, and if the client hesitate in doing that, that is the limitation, and that has to be identified on the day one. And once we identify that, on that basis, we should understand and we should evaluate whether to take this audit assignment or not to take this assignment. Okay. This is very categorically, again, I am reiterating again and again, members, because once you deliver the audit where the funds are involved from the bankers, there are the projects, plans, etc. This all are very critical, because then our audit opinion and our audit delivery is going to the various person in the public that they are relying on our audit report. They are relying on it. If we do not have all the information, if we do not have an appropriate access, we can't perform our audit. So the very simple point here that if there is any limitation, we should not accept the audit assignment. What happens in case of a recurring audit? Okay, let's say if you have a recurring audit, which you are doing on a year-on-year basis. In this kind of a scenario, when we have a recurring audit, we have to understand that whether the engagement letter is required at each period or not. The input which we have from the guidance note is that, no, you don't need a engagement letter every year because it is a recurring engagement you are doing, but it requires the auditor to assess whether the engagement letter need to be revised or not. Okay. For example, the owner has changed. The person who has signed the engagement letter is now no more with the organization. Then you can't continue the audit with the same engagement letter, because then the owner will say that this is what not I have signed. I am not aware of this situation. This requires the auditor to kind of enter into the new engagement letter. Any revision or the special terms in your engagement require the new engagement letter. Any recent changes in the senior management, which we covered, significant change in the ownership, we covered that. Okay, this both are a separate terms, okay, which is being used. In case of maybe a mid-size organization or mid-size company, the management is different as compared to their owner. So both, if the management is changed or the owner is changed, required us to review and re-sign our engagement letter. Any significant change in the nature and the size of the business. If there are any significant change in the size of the business or maybe the nature of the business, revise your engagement letter. Statutory requirement, if required, you to revise your engagement letter. Your framework has been changed. Earlier you are following under accounting standard. Now you are, let's say client wants to go under Ind AS. The framework is changed, go to the new standard. So this is basically require you to kind of evaluate when you need to have a new engagement letter in place. Some of the other very key messages here. Auditor shall not agree to a change in the terms of audit engagement. See, we have a standard engagement letter and the auditor, let's say, feel that this is what they need to continue as a part of our audit engagement letter, or maybe this is what the para is important. They should not change unless and otherwise the reasonable justification. If there is justification, if it's not required, not relevant, you can definitely delete it. if the now the a second element which has been explained in this slide is basically what happened if the auditor is required by a law to give an opinion in the reporting framework, which is, let's say, not an Ind AS or an AS, but some reporting framework prescribed by the law. Let's say, for example, there's a cash accounting system, okay, or let's say some special audit that auditor has to deliver on some key requirement or some key accounting aspect, or maybe on a cash basis of principle. So in that scenario, first you have to give additional notes and disclosure in financial statement. Okay, why we are discussing this in the engagement letter? Because you have to categorically agree this with your client day one while doing this assignment. There will be additional disclosures in your financial statement. Second, the emphasis of matter paragraph. This audit is not in accordance with the applicable financial reporting framework. The emphasis of matter paragraph is required. So some of this key element you should agree to the client while you deliver your or while you agree and while you take the engagement. So key messages: no changes in the engagement letter unless justified. Make sure that your engagement letter cover all the basic aspect, which is your financial reporting framework, which is your internal control that client has to have, which is your in terms of the responsibilities of the management, providing all information and access to all information. Who need to sign the engagement letter? The engagement letter need to be signed by the partner or the proprietor of the firm from the audit client side. From the management side or the client side, the engagement letter need to be acknowledged by the appropriate level of management. If there is a power given to the board, any director can sign the engagement letter. In case of a partnership firm, maybe a partner can sign the engagement letter, or in case of a proprietor, maybe an individual proprietor can sign the engagement letter. So see, if it is very a small audit, it is fine that you deliver the engagement letter to the client, you send. But it is very much important also, maybe I advise to all the member in all the audit, it need to be acknowledged as a countersign, and countersigned by the right person. Okay, so that we can kind of agree on the right number. So that's how we will reach to the conclusion on the conclusion that the engagement letter is signed by both the parties. So that is some of the key messages on the key messages on the engagement letter team, and we will move to our next session on the management representation letter, which is the last topic for the today, and then we will have any question answers from the members. So now the last topic which I am going to take you through in the next 15-20 minutes is about the standards on auditing on the return representation. This is a very important standard in terms of to ensure that management declare and management give us the right information. See, the return representation is categorically important when about the certain aspect around the audit, because what happens is in the audit, definitely you can verify the number, you can verify and vouch the document, but there are certain aspects where you have to rely on the management. Like for example, you cannot, as an auditor, we cannot conclude there is no litigations or there is some unidentified information, etc., etc. So let's say if the client doesn't disclose to me some litigation information, I will not be able to aware, and I will not able to apply the impact of the same in my audit. So then it is very important for the auditor to include this kind of a matter in the representation. The representation is not for the numbers and the documents, but is for the matter where it cannot be only concluded through your audit procedures, or maybe to support your audit procedures. What we are going to cover is our introductions for the topic, the objective and definitions, the management responsibilities, what happens if we have a doubt on the representation of the management, when we should request the written representation, who need to sign the representation letter, and communication threshold. So as we discuss in all other standards, the primary responsibilities of the management representation letters lies with the auditor. So it's an auditor responsibility to obtain a written representation letter from the management and those charged with the governance. See, it's very similar kind to an inquiry. Okay, when you are inquiring, documenting it, it is an official letter which management is signing to give you a comfort on the certain aspect. Like there are no things which are hidden from the auditor. They have not hide anything in terms of litigations. They have given us all access. They have complied with their responsibilities. So all these are representation which are given by the management, so that we can kind of get an assurance that management also has furnished or fulfilled their responsibilities. Okay, they do not provide a sufficient appropriate evidence on their own about any matters. See, representation is not an audit evidence. Your audit remain as it is as an audit, but the representation is just giving you a support to your audit. So that's why the last line is very important, where it says that it does not affect the nature, timing of the audit evidence that the auditor has to obtain. The objective, as I said, a very clear objective where the management has to take in responsibility of their work. That is what the primary thing in the representation letter. If you want to define it, where a statement where the management confirm the certain matter to support the audit evidence. Okay. Now let's say you are auditing a trade receivable. Okay. Now you know that one of the customer is not paying. Okay, but then you discuss with the client understand that we are regularly connecting that with customer, and that customer is very much connected to us. They are going to pay us. There is no need of write-off of this. There is no provision of this. They kind of show us maybe their documentation or their follow-up, anything on that, email on that. So that all things is fine. But then you can obtain an additional representation from the management, is that the management confirm that there is no risk as per their ongoing discussion exit. Okay, management should confirm on certain estimates on like this in their representation letter. So this letter is giving a support to the overall audit. And ideally, this support is not required for the financial statement or maybe the records or the amount, etc. Now, what are the primary representation? The primary representation include the financial statement management is prepared is a true and fair. Okay, they have given us all the relevant information. All transaction has been recorded. Okay, see, because if the management does not record some transaction, we will not able to make ourselves aware this management has recorded. If they don't record some transaction, we do some unpredictable procedures, maybe some other procedures, but it is not 100% possible for the auditor to ensure that all information around the audit has been gathered or all transaction has been recorded. It's what management has to confirm as a part of their responsibilities in the representation letter. The date of the letter should be as near to date of your audit report or of the date of your audit report, because they have to confirm or seeing that whatever the information they are available till the date of audit report signed, they have given us to ensure let's say sometimes some litigation has been arise maybe just before the 2 days of the audit report, but it can have a material impact on the audit opinion if the litigation is big. So then the management responsibility is to make us aware. So that is what exactly we have been requesting the management by way of the management representation letter, that please help us with all that information and give us your confirmation in writing. What happens if we have a doubt about the reliability of the representation? So if we have a doubt, we have to do our more extensive audit procedures. Okay, we have to relook at the competencies of the management, of the owner. Okay, if we see that there is a representation not getting signed, there is a delay, management wants to make a lot of changes in the representation letter, they are not signing it, they are not confirming it. So it should give us an alarming situations where we have to raise our bar of professional skepticism to understand, is there any wrong? Is there any risk as the entity is carrying which we have not identified? Okay, so when there is any doubt on the representation, we have to be categorically make sure that this all things being identified. Requested written representation not provided. Okay, let's say management doesn't give us a representation only, then what happened? Discuss the matter with the management first, why they don't want to give, understand their concern, justified, not justified, reconsidering the risk of an engagement. What is the risk of your engagement? You have to see that, is there any, as I said in my earlier slide, is there any risk in the entity that I'm missing? Reevaluate the integrity of the management. The integrity of the management is now at a stake where they don't provide us the request. Because if, let's say, we ask them that you have disclosed all the litigation, they have not disclosed something and they are not signing it, it is a questioning on the integrity of the management. The possible effect on the audit opinion, because if they don't provide us, the audit opinion need to be modified accordingly. And maybe we like to withdraw our audit engagement. See, the engagement letter, the representation letter, these seems to be very common document, but these are very solid document when it comes to the maintaining the overall audit file, because these are the document which help us in terms of identifying the right thing, okay, and concluding our audit appropriately. Because it's like that maybe we have done our audit 100% properly on the numbers, but let's say if we are not aware the matter around the audit or circumstances, or maybe few new matter, few litigations, etc., our opinion can completely change. So that's why it's very important that we kind of ensure that we have a right engagement letter and the right representation letter from the management. Who need to sign? Management, chief executive officer and chief financial officer. In a small entity, maybe the director, maybe the owner can sign the kind of representation letter. Make sure that in a small entity also, if the accountants are there, it need to be signed by some finance person also, because ideally it is a responsibility of both the finance and the management to give a appropriate financial statement. Because why I'm saying this, because the finance person will know only the financing aspect. If the owner doesn't disclose the certain matter to finance, then finance will also not be able to prepare the financial statement. So it's a cumulative responsibility of the finance as well as the owners. If any individual who has any special skill, knowledge, etc., internal counsel, they also need to sign it. What are the specific content that need to be covered is ideally the business plan, the liabilities, the title, the control of the asset, the laws and regulations. See, you can't include the numbers because that you have largely audited. You can include them, but what additional aspect is the plans, liabilities, estimates, the titles of the asset, control of the asset, compliance. That's all I need to be included. As an auditor, what we do is we identify some misstatement threshold, and that we need to communicate to the management. If any misstatement, any wrongdoing, or any kind of a misstatement in the financial statement is bigger than the amount that we identified, then we have to communicate to the management, include in our representation letter. But the very important point to remember, members, is that it's not a substitute of the auditor responsibility. By obtaining this letter, you can't say that I have obtained this letter, hence I have done my work appropriately. You have to do your audit procedures and then you come to the representation letter. The example I have given, like say if there is some debtors which is not collected, you can't just take a representation letter कि इसमें कोई issue नहीं है, there is no risk in the letter. Simultaneously challenge management and ask management how they have communicated. Is there any follow-up email? What is the customer responding? Along with the audit evidence and your representation letter will give you overall audit completeness. So members, I think that was from my side. We discussed the three important topic today, which is one aspect on the in terms of the audit documentation is very important, where we have to maintain our audit documentations file, because that is the primary responsibility to deliver our auditor opinion and overall audit reports. Second, the audit engagement letter. Management have an appropriate responsibility. They understand that responsibility. And the last one is on the representation letter, where the management is kind of need to be aware about the facts that they need to disclose. This is it from my side, all the members. I think these are very three. I advise all the members to go through the guidance note on the small entity audit, which contain the various good example, illustrative audit program, everything, a very good kind of an input from the ICI on this. With that message, maybe I leave it to the member if there are any questions.
Thank you, sir. Thank you so much for wonderful deliberation and taking all the three topics in a very wonderful and lucid manner. I have received certain queries of the members, sir. First is, does a small entity need to have a manual as per SQC1? Does it have to be in detail like that of big firms?
No, a small entity does not require, but at least they need to, as maybe required, okay, they need to maintain at least some bare minimum requirement. So the quality aspect is not about the detailed SQC requirement, but this engagement letter, all this is also a compliance of the audit quality which the firm need to maintain. So the engagement letter is one of the part of that. So maybe for a small entity, the complete SQC is not applicable, but this some of this requirement is coming from the respective standards on auditing, has to be complied with.
Sir, another one is, please guide us on the standard set of documents and letters to be kept with the chartered accountant, and share some formats for some reference if possible.
So I think that's why I was emphasizing on the a small entity guidance note, where it include the multiple illustrative. Plus, if you are, if let's say it include the engagement letter, representation letter, some other letter, okay, communication with the client in terms of an accepting assignment, multiple illustrations. But there are some additional also, okay, maybe members who want to kind of an, you can reach me, you can get my contact details from the coordinating team. And if they want any specific format which is not being covered in the small entity guidance note, I would be happy to provide.
Sure, sir. Sure, sir. Sir, will audit documentation is differ between the large entity and small entity?
Yes, it will definitely differ. Okay, because as I said, maybe very small entity, one person owner, two partner, etc., will not have that robust requirement of maintaining the audit documentation. Like, let's say for a large client, you do a risk assessment, you identify why there is a no risk on the client. This is the, maybe the risk is that they will not able to repay the borrowing. The risk is that they will not able to continue for the next 12. The risk is that the related party transaction is very high. So depending upon the client portfolio and size, it will differ. All these risks are not there for the small entity. So then you can just simply, in your risk assessment, conclude that saying that it's a very small entity with no external parties involved, no dependencies on the other person, there is no risk identified. So it purely differentiate.
Yes, sir. Thank you, sir. Thank you. So when auditor is appointed for 5 years, does he need to get engagement letter signed by the client every year to comply with the essays?
No, we discussed that topic. It is not required for the every year.
Yes.
In the engagement letter, you can mention that it is a engagement letter for the 5-year term. Okay, and maybe it continued for as a to perform the audit for the 5 year, unless and otherwise the circumstances which we discussed the changes, like in terms of a change in the ownership, change in the senior management environment, or maybe type of the business they are doing, that triggers the change in the engagement letter.
Yes, yes, sir. If auditor is appointed, does he have to audit opening balances also, or he can rely on the last year audit report and the accounts?
No, so as an auditor, we have to kind of do certain procedures on the opening balances, and there is a separate standards on the opening procedures. My understanding is that if it is audited by the chartered accountant, you have to preliminarily ensure that audit balances are appropriately carried forwarded. And if there are the balance sheet item, which is if you find maybe difficult to rely upon on the numbers, maybe you can do some additional procedures. But maybe the standards on auditing on the initial opening balances need a more kind of an input. Okay, it will not be a very specific answer that I can guide, but definitely you cannot rely blindly. You have to ensure that there are some bare minimum kind of an professional skepticism to apply on the initial audit procedures.
Sir, what are your opinion about the Nidhi company auditing? Nidhi company auditing.
Maybe the standards on auditing applicability will not differ. So from that perspective, I will say that it will more or less, you need to comply with those standards. But pardon me, or maybe I need to get back to on this, since I'm not much familiar with the Nidhi company's audit in the rest of the aspect.
Yes, sir. Sir, would you like, member is asking and requesting about the one question relating to this signing of the engagement letter. So small, they are asking, is a small entity does not sign on engagement letter, whether it is okay if they sign on the financial statements?
That is also okay. There is a one FAQ in the guidance note which says that it is just, let's say auditor is prepared, but it is to be delivered to the client. Okay, and delivery ya to we will do by, let's say, courier, etc., or the client acknowledge the delivery. Okay, so then at least the delivery is required, that is covered in the guidance note. If it is not signed, in the very rare scenario, it is okay. But I advise the member it should be getting signed only.
If the small entity is a branch or division, do we need to have an engagement letter in that case also?
Yes, yes. It is equally applicable for the branch and division, because you are issuing the audit or opinion on that branch as a separate entity only.
Yes, sir. Sir, a single chartered accountant can sign how many balance sheet in 1 year, including small companies, sir?
I think I will pass on that question. Maybe we need to get back to Rohit on this answer. I am not aware of this aspect, but maybe we can get back to the members on that.
So on the MRL, an impression goes, if everything, the management is being asked to confirm that after all, what the auditor is doing in that particular case. Any suggestion or comments in that particular case?
Yes, I would like to suggest on that. Okay. See, what happened is when the auditor give a lengthy management representation letter of the 25 pages, it will not work ideally. Okay. And the intention of the representation letter is not the management to confirm on the numbers. So ask the management to give a representation on the matter where we are not rely on the only audit procedures. Okay, it is a corroborative evidence. So if you ask the management, let's say you have a fixed asset of this much amount, if I will be the management, I do not confirm that, because that is the auditor has audited. But if the management is asking me to confirm that how they have determined the useful life of the asset, the management has to confirm, because that involves the judgment as well as the management of assessment on their fixed asset. It cannot be audited by a theory, by a practical aspect of the number crunching. It has to be some reliance of a judgment which involve the representation.
Yes, yes. So last question, kindly guide if government client not preparing the financial statements, but ask auditor to do so, and also not yet acknowledge the engagement letter since 2 months.
See, in this scenarios, the government client, first of all, we should be making, because it's not about the government client. Okay, members, if I want to tell you, it's about any client you will see, because the client which we are dealing with might not be so much educated or maybe organized. Okay, so then they hesitate. Initially they will hesitate, and we need to educate them, and then they will understand, and they will start doing it gradually. So then, first of all, it's a firm determination of the member where we need to ensure that we need to educate them. This is what required. Explain them why it is required. Then don't lose a patience, but then keep emphasizing the importance of that. Then ask them to sign it. Otherwise, maybe you should not jump on the work, and see that how best and early you can get your engagement letter signed, can get the financial statement. It's a process required deliberation and maybe the a time period, because let's say it's a very first day, if I want, because there are a lot of responsibilities with the management in our auditing standard, but every first day if I ask everything to management do, might not work. But then see that what is the critical thing which management has to do, where the engagement letter can't be skipped with, has to sign. I think this step-by-step approach should help the member.
Thank you, sir. So thank you so much. You have taken a lot of time for this presentation, and completely 2 hours you have spoken on these three topics. On behalf of Auditing and Assurance Standard Board, I extend my heartiest thanks towards you for sparing your valuable time and acceding to our request on a very shorter notice. Thank you so much, sir. Thank you so much. We have gained a lot through your deliberation. Thank you so much, sir.
Thank you. Thank you, everyone.
Thank you, sir. Thank you.